And it's Wednesday, crude oil.
Oh, this is fun.
We got a lot going on, man. Everything, right? Fed Day, you got a gold report webinar coming up tonight we'll talk about. But let's pull this up because it's 10:25. We're going to get that number 5 minutes from right now. And we're jumping into the spreads. I'm going to take a look at crude. I feel like this computer is still waking up this morning. All right. We're looking at the November contract, talk about some volatility. This will be interesting to see what kind of premiums they're going to price in this today with everything moving, right? So we'll start things off. Pull up this finder again. We'll look at these, and let's just see where we have our 11 a.m.s first. Again, the contract's at 58, so we're going to have a $58 one. We're only about 12 pennies away, right? Yeah. Contract's at 58.14. This is going to be our bullish ticket right here. It's $26. We're about 10 out of the money on the bullish side, and 58.25. That's tough. The computer's taking its sweet time this morning.
Gotta give us some B12.
Yeah, so just for the 11 a.m.s, check that out. You're talking about $60. And you're
$60 away from 58.16.
58.25.
58.25. Okay, okay.
So that's a little pricey. If you follow the program, $60, you need 60 cents, and you're capped out at $1.50. But guess what? The market's probably pricing in. You can get value on both of those. Remember, you let it spike one way, and then hold the other.
Stay right there, folks. Tommy and I are going to be coming right back with those oil numbers. Dow down 29, NASDAQ off 19, S&P's off 4.5. Come right back. Welcome back, folks. Oil inventories rose 1.06 million barrels.
I think we were supposed to get a decline, was the estimate. Jumping back, a little bit of movement, nothing too crazy just yet. We are getting a little bit higher prices. We're trading at about 58.13 coming into that number. We're trading at 58.17. The market's still digesting that, I would say. 1.06 million barrels. And is gas? Yeah, gas rising 781,000 barrels. And we'll wait for that to load up, but a rise in oil inventories. Yeah, the expectation was for a decline of about 2.2 million barrels. We come in at a build of 1 million barrels. We'll see if the market reacts to that. I'd say there's more going on in the oil market than a 3 million barrel miss.
There's no doubt. And if we go take a look and we just put this, now this chart here, folks, will be delayed. But yeah, what I really wanted to look at is the aspect of how we're getting back into the gap that was established on Sunday night at 6 o'clock. So Sunday night, and we closed Friday inside the oil market at 54.85. You spiked all the way up to 63.38. It was actually 65, I think. That was when it was opened. And anyway, this is saying 63.38. Now, the low of that was 58.77, and you're at 58.36. That's saying that, number one, you're going to come right back down into it. This is, now, what was wild about this spike, by the way, too, is that it couldn't take out the swing point at 63.87. We went to 63.38, I think.
Okay.
Yeah, that's important to understand.
Sure.
You know, you should have been able to take out that little swing point. That's not even a major swing point. The major swing point is up at the highs at 65.59.
Yeah.
So, deviant markets, you just gotta love them. I mean, it's pretty wild how markets like to move.
Yeah, and catching a little bit of a bid, 58.31. But again, in context, so we have a 1 million barrel build. There's expected 2. That's 3 million barrels. That Saudi attack put 5.7 million barrels off every single day.
Right.
And that's a weekly $3 million miss from the estimate.
Right.
So.
And then, you know what the Saudis had said is that they said that they're actually going to ramp it up to 9.2 million when it gets going. Okay. So that's, you know, I'm sure that they're saying, okay, we missed this, and now instead of doing the 7.2, it's, you know, 7.
We're
gonna ramp the baby up.
They should have some demand that they can fill.
Yeah, there's no doubt. And, you know, the market is looking at that. This is going to get interesting.